What if the same intelligence used by the world's largest institutions could help you find where the biggest money is really flowing? I'm Peter Walker, co-founder of World Capital Management. For more than 40 years, I've studied the performance of professional money managers and analyzed what separates the strategies that succeed from the ones that don't. Today, I want to walk you through an investment methodology that combines decades of that research with artificial intelligence, a process I call follow the money. Here's the problem it solves. For most of investing history, you had two choices: pick individual stocks and hope you found the right ones, or buy an index fund and simply own the entire market, winners and losers together. Index investing works. Firms like BlackRock and Vanguard manage trillions of dollars this way. But owning the whole market means you also own its weakest companies. You get diluted by mediocrity in exchange for simplicity. Follow the money takes a different approach. Instead of owning everything, it uses AI to identify where institutional capital is actually flowing right now and concentrates on the companies benefiting most from it. Here's how the process works. It starts with the 100 largest companies on the NASDAQ, the segment of the market where non-financial institutional capital is most concentrated and where the greatest growth has historically occurred. From those 100, the process identifies roughly the 50 companies showing the strongest price momentum. Momentum matters because it reflects where institutions are already putting their money, not where we're guessing they might. Those 50 are then filtered two more ways. Fundamental analysis looks at earnings growth, revenue growth, profitability, and financial strength. Technical analysis confirms the market itself is backing those fundamentals: price trends, relative strength, and investor demand. Only the companies that pass all three tests, momentum, fundamentals, and technicals, make it to the final step. The result is a concentrated portfolio of approximately 15 companies, not hundreds, 15. That means more volatility than a broad index, and that trade-off is intentional. It's the cost of avoiding the market's weaker performers. Now, concentration without risk management is just speculation. So the process includes a built-in safety mechanism called a super trend signal. It tracks the overall flow of market capital. When that signal turns negative, the portfolio exits into cash or short-term treasuries. When it turns positive again, the process starts over and rebuilds the portfolio from scratch. This is where artificial intelligence comes in. Traditional investing runs on fixed rules that don't adapt. Neural networks are different. They continuously evaluate the shifting relationships between momentum, fundamentals, technicals, and capital flow, adjusting as market conditions change instead of staying locked into assumptions from the past. To be clear, the AI doesn't replace judgment. It's a decision support system built to surface what traditional models often miss. The philosophy behind all of this is simple. Focus on the market's strongest companies. Follow where institutional capital is already flowing. Confirm every position 3 separate ways. Stay concentrated. Manage risk objectively. And let AI do what it does best: recognize patterns humans can't process fast enough to catch. If you'd like to see how this process is applied in practice, contact us at admin@worldcapitalmanagement.org or call us at area code 4153867111 and I'll send you more information. Important disclosure. This content is provided for educational and informational purposes only. It does not constitute investment advice, an offer to buy or sell any security, or a recommendation of any investment strategy. All investments involve risk, including the possible loss of principal. Past performance and historical market trends are not guarantees of future results. Always conduct your own research and consult a qualified financial professional before making investment decisions.